There are over 1,400 unicorns in the private equity space, yet in the public markets, it's been cut in half. Spencer McLeod, partner and head of research at G Squared, tell us, what do you think the reason is for this?
Yeah, well, Courtney, it's a pleasure to be with you, and thanks for having me today. It really comes down to a series of factors and structural changes in the capital markets that are relevant to every single viewer that's following this. First and foremost, it's a lot harder to be a public company than it used to be. In the year 2000, the average business, Courtney, went public with just $12 million of trailing 12-month revenue. The average business in the venture-backed community went public at the age of 4, and Google, Microsoft, and Amazon all went public with market caps stunningly below $1 billion. Today, we had a portfolio company that just a few years ago, Airbnb, went public with a market cap of $100 billion. And what that means is that returns have shifted from being democratically available in the public markets to, as you alluded to, with the number of public companies being cut in half, to switching to the private markets. We think it comes out of a mindset of running a public company where you live, Courtney, solely in 90-day increments. It's not a what are you doing over the next 3 years or what are you doing over the next 5 years. It's can you beat your revenue target this quarter that's important. Second, the cost of being a public company is very expensive. It's been estimated to cost over $5 million a year to adequately service your investors and make sure that people have heard about what you're doing and how special it is. And third, I think that the number of public market focused investors moving to these passive exchange traded funds, it's created a far less mid-cap growth-oriented market that is looking for the next great thing and instead is looking for safety. And it's really a travesty. What we do at my firm G Squared is we are focused on investing in what we believe are the world's most exciting private innovative companies. Think about businesses like Airbnb, Anthropic, Toast, Brex, Wiz, and the list goes on and on and on. And we partner with these businesses as they go from that nice local business that Courtney would have gone public at the age of 4 to when they're going public today at the age of 12, 13, and 14, and managing their liquidity over that period.
That's really interesting. And so it's almost like you and your company, you're the fixers.
We partner with businesses in a unique way to solve challenges that fit them. The analogy that I use is everyone at this conference is wearing a suit. But the suit that I'm wearing, Courtney, wouldn't fit a single other person at this conference perfectly. We built G Squared to be venture capital squared. We weren't founded in 1972 like so many of the venture firms that you hear about today. We were founded in 2011 with a very simple idea, and that was to make our capital flexible to fit the needs of these exciting businesses as they went from great local businesses to category redefining global businesses. So along the way, we have done small transactions. We have done large transactions. We've done high-profile deals. We've done deals no one's ever heard of. Our smallest transaction in firm history was $1,600. Our largest is in excess of $200 million. If you are building a great business and looking for a partner that will be there with you as you scale, advance, and accomplish your objectives, G Squared is the perfect partner of choice for so many of these companies.
Well, and what do you think is going to be next, especially after the upcoming election and in 2025?
Yeah, well, great investment bankers, Courtney, as you and I both know, always tell you great news is just 6 months away. I think folks came into 2024 saying this is going to be a great year for IPOs. The reality is it hasn't been. In 2013 to 2020, the average number of venture-backed IPOs per year was about 35 to 40. In 2022, there were just 2. Last year, there was just 6. And this year, we've seen just 7. I think we're going to begin to see a more regression to the mean move. But will we see 20 IPOs next year? Will we see 30? That's unclear. And all of that means that the need for liquidity is massive and dramatically underestimated by the broad public. And that is a great tailwind for us to be pursuing at G Squared.
Fantastic. Well, you heard it here first at our 7th private equity event in San Francisco. Thanks so much, Spencer, for taking the time to speak with me.
Thanks for having me, Courtney. It was a pleasure.